All right, gang. So in this strategies lesson, we're going to actually cover the long put. And the long put strategy is a very bearish strategy. So basically, our outlook on the stock, the underlying stock, is that we believe that it's going to go down. And we believe that it's going to do it fast, okay? So we believe it's going to go down. It's going to go down fast. The long put strategy works very similar to the long call strategy, just the opposite direction that the stock is going to move. So as far as executing, it is a simple strategy to execute. However, in the same token, it's a very difficult strategy to manage because you have to be right, in the direction. Okay, so you have to be right in direction. You also have to be right in volatility. And because we're buying, that indicates that the volatility should be low and that we're expecting volatility to rise. And then time is your enemy. So you can't be sleeping at the wheel. You have to be managing this trade because time is going to eat away at you every day. So that's what makes it a little more difficult. But you execute this in the same way. As you look at the deltas on the put side of the options chain, they're negative. We don't refer to them as negative deltas. We just call them the delta number that they're at. And so in the same token we did on the long call strategy, we want to aim for around a delta 60 to delta 80, in between that range. The delta 75, because 70 is the closest, we want to get as close to 70 as possible. If we take a look at the delta 75 here, we have over 4,200 open interest. There's a lot of action there. So we're more inclined to actually choose that particular strike. So we want to actually buy the single. And when we click buy single, then we're going to go to confirm and send to take a look here at our risk and our profit potentials. So we have our break-even stock price. So the stock has to move down to $278 in order for us to break even. And our max profit here is $27,870. Now, I'll cover with you how we come up with that number. As you remember, the long call strategy session, the max profit was infinite, okay? But in this case, it's not infinite, okay? The max loss here is 2130, and that's the easy one to remember because it's a debit strategy, okay? We're going to pay a debit to get into this trade, right? Because we're buying. For the buy strategy, we are paying a debit, and we can see $21.30, okay? And that's times 100 shares, so that's $21.30. $2,130 is the max that we can lose on this particular trade. Okay, so that's our max loss. So our risk is defined. Now the max profit is based off of the. You have to understand the rights of puts. Puts give you the right to short a stock. Okay, and so if you short a stock, that means you anticipate for it to go down. But what's the lowest that a stock can go to? 0. So every stock can go to 0. They can't go past 0. The stock can't go negative. So because it goes to 0, then this is how we calculate the max profit. In this particular option, we chose the 300 strike. And so we take that 300 strike times 100 shares. That's $30,000. Okay, so $30,000. And then what you do is subtract. So you take the exercise strike price, which is $30,000. Okay. And then we subtract the debit that we paid, which is $21.30, and that gives you your max profit, which is $27,870. So that's your maximum potential profit. Not quite infinite, but it is a huge reward, okay? So let's actually go to the Analyze tab. All right, the Analyze trade on this one here, as you guys can see. If we get into this particular trade here, let's actually reset all of our values down here, so that you can see how all the elements are working together. Okay, and I want to buy this. Let's actually buy it. Okay, higher. Okay, this is about as close to 0 as we can get. Let's just take that right there, about $21.50. So let's just say we buy this particular option contract at $21.50. It's going to tell us our break-even price right here. Okay, we can see the break even is right there, $278. Okay, so if the stock comes down here, it has to come down here by expiration or on the day of expiration. If it's here, then we break even on the day of expiration. Anything to the left of this is profit. As you can see, the stock, underlying stock goes to the left. That means it's going down. Our maximum profit continues to excel. Okay, so it's going. Now, if the stock price move against us and it starts to move higher, then we start to lose money. And we can see how much money we're losing on the little tab here on the side, the little dialogue over there to the left. It tells us if the price goes down, the max that we can lose. And then the further we go out, 2150, it doesn't matter how far this thing go down. That's the max that we can lose. So our risk is defined. All right. Now, in this particular strategy here on the Greeks, as you can see, the deltas are negative. So that means that if the stock goes up, we're going to lose money. But if the stock goes down, then we make money. And then the gamma is the multiplier. The theta is time here. Okay. So as time goes by, we are losing time. So this is a theta negative. Okay. Vega is positive. So as volatility increases, we actually make money. Let's actually just push the volatility up and you'll see 2%. Okay. Volatility, if price doesn't move and volatility moves up, okay, we're making money. And normally volatility moves up when stocks actually drop in price. Okay. That's what normally happens. Okay. So the volatility, as you see, as it goes up, this is really going to work out in our favor. Okay. So we want the Vega to work in our favor. Also the stock price, if the stock price goes up, we're going to lose money. You see that? We lose that money. If the stock drops, which is the direction that we're playing here, then we make money. Okay. And the same with, everything, all the elements all together with the pricing. That's the direction of the stock, the volatility, and then the time decay. Okay. So the time decay, again, you see as the time, progresses, this is going to eat away our position. So this is the long put strategy. Okay. Again, you just want to be very bullish, very bearish on your outlook here. This is how you execute. You can already see, your max potential profits and loss, and you can actually manage this trade through your Greeks here. So anyhow, that is your long put strategy. Catch you guys in the next class. Peace.